What's going on, family? What's going on, family? What is up? What is up? What is up? What is going on? Good afternoon. Actually, good morning, good afternoon, good evening, depending on where you're actually tuning in from today on this beautiful, beautiful Friday, at least afternoon for me over here in the U.S. I appreciate every single one of you guys for tuning in with me tonight, family, or today, actually. I'm so used to doing these at nighttime, but so excited for you to be here with me today. And go ahead and drop those locations in the chat, right? Let me know where you guys are located today, family. Let me know where your locations are, right? And I really have to get in the habit of saying every single aspect of the time of day, right? Whether it's morning, afternoon, or evening, because we are very diverse in this community where we have people literally across the entire globe, and it's amazing to actually see. It's amazing to actually say. And I'm just here back with another day. Hopefully, I'm able to provide you guys with a little bit of value, a little bit of insight on what the hell has been happening with these markets over this past week, right? Because we had a very, very interesting week, to say the least. And yeah, I wanted to at least give you guys, my last ending thoughts to close out the week, so that we can be prepared going into next week and have a phenomenal week next week. Okay, so let's see what we got in the building. Let's see, we got New York City in the house. We got DC. What is up? What is up? We got Fort Lauderdale in the building. ATL on the check-in. Alabama. What is going on? California. Riversdale. What's going on, Salson? How are you doing? We got Malaysia in the building. Shout out to all my Noti Gang members. I see y'all. Shout out to all my actual YouTube members that are in the private chat as well. I appreciate y'all. I love you guys. We got Ghana in the building. Toronto in the house. Charleston, South Carolina. We got Muskegon, Michigan. What's going on, Austin? Good to see you in the chats, my brother. Right, we got Scranton, Pennsylvania, PA in the building as well, represented. We got my guy, Ismail. What's going on, Ismail? Good to see you in the chats, my brother. Shout out to you guys out there in Las Vegas. Super excited to be here with every single one of you guys. Like I tell you guys, every single session, every single stream, because without y'all, I would not be able to do this. Because obviously, in order for these streams and this type of value to actually have an impact, just got to be people listening, right? So I appreciate every single one of y'all, right? I see we got Vermont in the building. My guy Kyle, I see. We got the Philippines checking in as well. right? Absolutely amazing to have every single one of y'all. I do want to give you guys an apologies for yesterday. Yesterday, for some reason, my internet was just going so crazy, very, very, how can I say this, chaotic, right? Pretty much like what we're experiencing in this world today, a lot of chaos. That's how my internet was going, right? There was periods in time where my internet was absolutely strong like it normally is, but then for some reason there was periods in time throughout the day where it just was not acting up. So I actually had somebody come this morning, right, from Spectrum, and they pretty much hopefully fix the situation, right? I've been having very strong internet all day today, so that's absolutely a positive, and hopefully it continues and we don't have no issues or no interruptions whatsoever, right? But once again, I'm super excited to be here. I know I was supposed to do last night. I just couldn't, literally couldn't, and I'm not even too upset that I couldn't do it yesterday anyways. I wish I would have been able to give you guys a little bit of insight of what I'm going to talk to you guys about today, because you guys could have been able to take advantage of the markets, because, you know, there's a lot of opportunities to actually jump in. But again, you know, issues happen. But on a positive note, I was able to actually watch the finals. Shout out to Steph Curry. Shout out to Draymond Green. Shout out to the Golden State Warriors for actually winning their 4th title in the past, 6-7 years, something like that, right? So shout out to every single one of them, all them boys over there. So it was an absolutely great final. So again, my selfishness has to come in a little bit for this one, because I am a very, very big sports fanatic, you know, and I really just love sports. So I was actually able to watch, you know, the finals as well, because if I was on the stream with y'all, obviously my intention would have been, you know, really providing you guys with a ton of value, and it wouldn't have been on the game itself. But overall, it's been a positive morning. And yeah, let's go ahead and get into this, right? So we got Jersey in the building. We got Hollywood, Florida as well. Let's see. Yo, what's up, bro? Can you go over that question I asked on Instagram about inflation for the family, right? That was you who actually messaged that, Pharaoh? Because if it was, that was actually a really, really good question, right? That was a really, really good question. It really was, right? So I'll definitely actually go over that as well today, because that is, again, that was a really good question that you asked, and that's honestly something that I've thought about, but I never really put too much emphasis or too much energy into it. And I feel like everybody for sure should at least be aware of that aspect, because it's probably going to play a major role in how inflation really is, right? So we can actually start with that today. You know, actually, let me go over the actual news, the data that came out, and then we can go ahead and really get into that question, because again, that was a really, really good question, right? So, and that's actually something I want to bring up as well, right? I'm actually going to be planning, guys. If you guys noticed, I really haven't been posting no regular videos on my channel lately, because it's all been pretty much through live streams. Now, I want to ask you guys this question. Do you guys recommend, or what do you guys prefer? Do you guys prefer these live streams that I host, or do you guys more so propose those videos that I actually create and I edit and I go through that whole process of putting that whole together? Golly, that was super loud. But shout out to you, Elliot. What's going on? Shout out to you, Elliot, for being a new subscriber. Welcome to the familia. I appreciate you for being a part of the family. Definitely means a lot to me, 100%, and I appreciate you. Right, but serious question, guys, right? What do you guys think, right? Do you guys prefer these live streams, or do you guys actually prefer when I actually take time to, you know, put an entire video together, edit it, and then drop it in that sense? What do you guys think? Right? Because I could do either or, right? But my plan was to do both. But I just like the live streams, right? I don't know. For me personally, I really enjoy the live streams, because we're able to really talk a lot more. We're able to really get a lot more in depth as well, because your guys' comments, your guys' questions, your guys' concerns just really allows me to come up with more valuable information to go ahead and give you guys. So that's why I pretty much really stopped putting, you know, those regular videos on the background, or I stopped doing them so I could focus more on these live streams, because I feel like more value is being provided. And editing is a hard thing, right? Like one thing I don't like about creating the videos is the editing aspect, right? I can't stand editing. Like, I can't stand it, right? In these live streams, we don't edit. This is all real, raw, actual value, right? Even if there's hiccups that are happening, it's going to be unedited, right? So that's definitely a big positive, right? 100% a big positive. But let's see. I wanted to get your opinions, right? I see we got Wisconsin in the building. We got the boy Skaggs on the check-in. What's going on, my brother? Appreciate you, right? Matter of fact, Skaggs, are you available right now, right? Let me know if you're available, because I can actually get you over here on a Zoom, and we could really have this conversation together, right? Because obviously over the past week, 2 weeks, 3 weeks, honestly, over the past few months, you know, we've had general ideas that matched from a more macro perspective. But then we also had different opinions on whether what could happen next, right? And I would love to get your opinion on what you believe is going to happen next. And then I obviously give my opinions on what I believe is going to happen next, right? And I feel like overall the community will absolutely benefit from that. So let me know if you are available. If you are free right now, I could definitely send you the Zoom link and we can have this conversation together. And yeah, let everybody really hear their conversation as well. But I see we got Wisconsin. What's going on, Alex? Good to see you in the chats. Let's see. Live streams, both. I like the live streams. Live, both okay. Live streams, live. Both, but do every upload as a premiere. I like that as well. Both, yeah, both is good. So you guys really enjoy both of them, right? Okay. I like live though. All right. So you guys like both of them, which is absolutely amazing, right? So I might have to really get back to doing both then, right? Doing the live streams and also creating, the videos as well. So you guys are able to get those, more edited, more structured type of videos. And we'll definitely go ahead and we'll get that stuff going for you guys. At the end of the day, family, right? I know you guys appreciate the value that I give, but me, I'm a servant leader at the end of the day. And I really want to provide you guys with the best experience possible via this actual YouTube channel, because I have a lot of high hopes. I have a lot of goals that I want to accomplish with this, and the only way that I can actually do it is if I'm actually serving you guys more than anything, right? So I'm gonna make sure that I do everything that makes it more efficient for every single one of y'all, right? So I see we got Cameroon in the building. Shout out to you guys out there in Cameroon. I would love to actually make a trip out to Cameroon and just experience that culture as well. That would be absolutely fire. Let's see. Editing takes up time. Save your time, bro, for this value. That's 100% real, Oscar. Editing does take a lot of time, like the way, and again, this is completely off topic, but just so you guys can really see where I'm at in terms of lives versus edited videos. Like if I say I record a video, right, and I spend 20 minutes recording this video, like I normally put in triple the amount of time actually trying to edit the video, right, to make sure that everything is the way that it needs to be. Now, I'm not saying that my editing skills are up to par or that they're amazing, because they're really not, but I'm also not the worst, right? So I definitely take a lot of time, to really put the finishing touches and the editing that I need to put onto it, so that is, again, an enjoyable video for you guys, and it's also a video that holds your attention, right? Because I don't want to be creating videos where people jump on for 2 minutes and then immediately they want to jump off because it's boring and all that good stuff. So I've been putting a lot of time as well, really just trying to perfect my editing skills so that I can create more enjoyable videos for you guys as well, right? If I have to go back to creating those videos, then I 100% will, because like I said, I want this entire journey that I'm on to be enjoyable for everybody that's actually making it possible. All right, so let me give me 1 second. Let me just go ahead and send this out to the boy Skaggs, so we can have another phenomenal thought and opinion on the call as well. Let's see what we got here. Let me see. Matter of fact, I'll actually set it to all of my business partners to see where they're at, see if they're interested in also providing some value to the family, right? Because again, family, like right now, these streams are obviously me on it, but we're actually in the process on the background of really creating a crazy conglomerate for every single one of you guys here on YouTube that are interested in truly actually taking your trading to a whole nother level. So let me just go ahead and send this out. Okay, perfect. All right, there we go. So that's sent out. So like I was saying, guys, let's go ahead and get into what I really want to talk to you guys about today, because like I was mentioning, it's going to be an absolutely amazing week coming up. I'm super excited for this week that's about to come, because guys, the markets have been absolutely on fire, absolutely been going crazy. And again, not to toot my own horn, but we've been pretty much on the money, guys, with every single thing that we've been doing, right? I mean, even with this correction that we quote unquote correction that we just experienced with dollar weakness that actually finally came in, which we're going to talk about. And I do have my thoughts and opinions on why this dollar weakness came in, which we're also going to talk about, right? But overall, we've been on the money, right? We've been on the absolute money. We've been seeing a lot of success. We've been seeing a lot of accuracies, just because how we're approaching these markets. All right, I try to tell you guys all the time, family, how I approach these markets, and I do it in a specific way for a specific reason, Okay, I want you guys in the chat, family. Let me know why we actually approach the markets the way that we do. What is the main driving factor of these markets, right? And I am asking in terms of an analysis, right? What type of analysis or what form of analysis is really creating or causing or dictating long-term direction in these markets? Let me know in the chat. Let me know in the chat, family. Let me know in the chat, right? Let me know in the chat. Let's see. We got Fifth Ward in the house. Shout out to you, Cedric. What's going on? What's going on? Let's see. Live streams bring value that most traders can't do that. But the videos with all the process of past the funding account, that is fire. Yeah, that's definitely going to be probably the next videos. And I don't mind showing you guys where I'm at in terms of the process for the funded account. I'm literally, again, I'm still in the same around the same, pretty much same area that I was last time I showed you guys on the last stream. I'm still on phase 2. I'm about $200-300 away from passing phase 2. And then obviously the next step is going to be the live account. And I'm just taking my time with this because, again, the markets have been absolutely chaotic. But not just that, you know, at the end of the day, I still got 2 more days, right? I have a couple days before I'm able to even actually pass it, right? Because of this whole minimum day thing, right? So, you know, I still have 2 more days that I have to trade, right, to make that 5-day. But once I get that 5th day, then I'll most likely be passed on the actual challenge. And then we can go to the live account. And then from there, I'm going to create a video on pretty much my process from passing phase 1, passing phase 2, and doing it all within a 7-day period, which is exactly what we've been doing it, right? We've been absolutely on fire with that, and I want to be able to give you guys that type of content as well, especially for every single one of you guys that do want to go ahead and go the prop firm route, which I highly recommend for anybody that is trading on limited capital. I recommend going the prop firm route, so you it might be a little bit easier for you to actually go ahead and do what you do. Right, but let's see what we got here. Wow, we'll be happy to receive you, Abel. I appreciate you, Gandhi. I definitely want to make my I really want to do a world tour, right? 2023, guys, like, expect me traveling to probably places that most people didn't even expect, right? Because I'm a very big supporter of traveling the world, right, and experience different cultures and just, you know, getting that experience down packed. So that's something I truly want to do, and that's what I plan to do next year. Let's see. Hey, but can you provide more insight of Japanese currency fundamentally? Thank you. Yeah, I got you, Jen. That's actually something I wanted to talk about today. And because I feel like it's also very important to understand the state of the Japanese yen. And I'm also going to use evidence from the Swiss franc, right? Because the Swiss franc actually did something pretty interesting as well yesterday, because they had their interest rate come out, their interest rate decision, and they actually raised interest rates by 50 basis points, and the market actually responded to that. So we'll definitely talk about that as well. We got a lot to talk about today, guys. I wish I would have been able to do this with you guys last night, but unfortunately, it is what it is. You know, I feel like the universe just wanted me to save this value for today as well. Right, we got the boy, the myth, the legend, Mr. Tyree Samuels in the house. What's going on, my brother? I appreciate you for tuning in. You know, definitely would be dope to get you on one of these streams as well, so that you can provide your expertise as well in trading. Again, one thing about me, family, is that if I have confidence in your ability to not just trade but teach, I'm more than welcome to go ahead and give platforms to people and really just put you in a position to educate. Right, that's what I like. So back to the initial question that I asked, guys, and we do got the boy, the myth, the legend, Mr. Skaggs here on the call with me on Zoom, so you guys will be able to hear him as well. All right, you're not going to be able to see my camera, but you will be able to hear him as well. So Skaggs, bro, let me make sure that everything is good. Can you hear me, Skaggs?
Yes, sir. Can you hear me?
I can definitely hear you. I can definitely hear you. Family in the chat, let me know if you guys can hear the boy Skaggs. I want to make sure that it's loud and clear on your guys' end. Can you guys hear him, Skaggs? Go ahead and say what's up to the family, bro. Introduce yourself to those that might not know who you are, if you don't mind. And I'll just make sure everything's good over here.
Yeah, absolutely, bro. Thanks for having me on here, man. For those of you that don't know me, I do go by Skaggs. At Skaggs on Instagram. I've been trading, you know, alongside Abel for what's been, I don't even know, 7 years now, bro, 8 years. So we go way back. We have a little bit of different trading styles, but ultimately we're doing the same thing. He teaches you guys a lot of amazing stuff on here about fundamental sentiment trading. Just kind of really breaking stuff down. So although we have our differences, we're also really doing a lot of the same. So yeah, definitely shout out to you, bro, for having me on here.
100%. So they are saying there's a little bit of an echo, but either way, guys, we're gonna have to work through it because this is pretty much just going with the flow. We'll figure.
You know what you gotta do, bro?
Talk to me.
You might have to mute the sound coming out of Zoom on your side.
All right.
What's happening is probably coming out of your speakers and then going through the mic.
There we go. There we go. How's it sound now, family? Let me know now. All right, Skags, you're not going to be able to hear me, though, unfortunately, unless you have the YouTube up. But let me know now, guys. Let me know if there's an echo now. Skags, go ahead and say something again.
All right, testing. You guys let us know if this is fixed.
Let's see.
Not too good. Yeah, if there's an echo, there's that one thing I can tell you to do. But it might take like a minute or two.
Yeah, we'll get it situated though either way.
Search on your computer, look for something called a video broadcast.
Let's see. Let's see. Still echo. All right, we'll definitely get it fixed. We'll get it situated, family. We'll get it situated, and because I definitely want to be able to have different opinions on this call, so that everybody's pretty much just has a stronger insight of what to expect going into next week. But Skags, just give me a second, bro, and I'll definitely Skags in a second, because I definitely, like I said, want him to be able to give insight. I'm pretty sure there might be a way. Right, there might be a way. Let me see. Audio output. Let me see. Yeah, we'll get it figured out. All right, we'll get it situated either way. Right, but let's go ahead and get into what I want you guys to talk about. What I want to talk to you guys about today, personally speaking. And that is going to be, let's see, open the video broadcast on your computer. The video broadcast. Let's see. Give us 1 second, family. Let me see if we can actually get this. I got it downloading right now, Skags. Let's see what we can come up with. I know that there's another software as well. I believe it's called Restream. That also allows it, but give me 1 second. I don't know. We'll come back to this. For sure. All right, but let's go. Let's see what else we got here, guys. If you have to go to effects and turn on the room echo remover, that will fix it. All right, let's see what we got here. Let's see. Maybe that will work. Yeah, I'm not sure how to do this. I don't know. We'll get it figured out. But let's go ahead and get into what I want to talk to you guys about today, guys. And let's go ahead and look at the markets and see how they reacted. So as you guys should be aware of, we did have a very interesting week, guys, with FOMC projections, FOMC statement, the federal interest. I mean, look at this week overall. Look at the calendar, right? We had pound news to start off the week, with the GDP numbers coming out lower than expected. So overall, guys, across the board, we've seen a lot of quote unquote negative data coming out for a lot of these economies as a whole. So the pound came out negative GDP numbers, or at least came out lower than expected. What's another thing? Retail sales came out lower than expected for the US. We also had obviously the Fed raising interest rates by 0.75%. That's a big deal. We had negative GDP for the New Zealand dollar. We had a higher number of employment change. A lot more people filed for employment over there in Australia, right? I mean, it's been a very, very crazy week, right? We also had this morning, right? Actually, yesterday, guys, we also had, the Swiss franc. They actually raised rates to go from negative 0.75% to negative 0.25%, right? And that's something I'm definitely going to speak about today, because that can give us an insight on how we can react and respond to Japan because Japan right now is pretty much still playing it safe. Japan right now is still pretty much printing money, printing money, printing money. You know, their rates are still negative, and as of right now, it doesn't seem like they have any intentions on changing that. But obviously, once information comes out for that economy, once data comes out for that economy, they will have to change course, and they might have to become a little bit more aggressive on how they're actually going to be pretty much handling their monetary policy over there in Japan. And we can look at the Swiss franc and pretty much see how the markets reacted to that data. And again, it's not going to be exactly the same, but we could almost correlate it to the Japanese yen, because those economies over there, and we have to understand, guys, why the Japanese yen and why the Swiss franc are also considered quote unquote safe havens. And the biggest reason for it is because those economies are a little bit slower, right? Not a little bit, but those economies are actually much slower than a lot of these other economies, right? So because they're slower, the value of those actual economies usually hold pretty strong, right? Because they're a little bit slower than most other ones. And that's why a lot of, you know, people consider them safe havens. It's not just that, but Japan, you know, when we're talking about mortgage-backed securities over here in the U.S., when we're talking about, you know, all these assets that, you know, are considered risky, you know, Japan is actually one of the biggest buyers of a lot of these equities that the U.S. sells, right? So when the U.S. is selling mortgage-backed securities, when the U.S. is selling all these assets, Japan usually buys them up by the boatload, right? And that's also probably a big reason why it might be considered as a safe haven, because, you know, they are being backed by a lot of these U.S. assets, right? And obviously the U.S. right now is the dominating factor, the dominating force across the board. And that's why the U.S. dollar has been absolutely on fire. But those are probably reasons why. Now, again, I want to talk about that really quick before we get into anything else, because, again, we did have just fresh data for the U.S., for the USD Swiss, or for the Swiss itself. And let's actually go ahead and take a look at the markets, guys, and see how the market reacted, you know, to the Swiss franc actually raising rates. And as expected, like I always tell you guys all the time, what happens when a central bank actually raises rates? It actually should, or what could that do for an actual currency? When an actual central bank raises rates, more times than not, that's going to cause the value of the currency, not the economy. Do not try to combine both of them, right? That typically gives strength to the actual currency, because that's going to cause a lot less spending to occur across the board. Because when interest rates go up, it makes the cost of borrowing to actually go higher. It makes the cost of everything for consumers and businesses to go up, and that usually tightens up the monetary supply over there. So when we had the actual interest rates for the USD, or for the Swiss itself, come out, it actually sent USD Swiss falling all the way down to around 0.96, right? We're talking about USD Swiss was hovering just right above 1.0, and as soon as interest rates came out, and that they actually raised, and technically is raising interest rates by 50 basis points from negative 0.75 to negative 0.25, we've seen an initial impact in Swiss strength, where the USD, or I keep on saying USD Swiss, where the Swiss franc actually gained a lot of strength. And that's why we've seen it absolutely tank to the downside. Now, the question that we have here is, this downside momentum that we have, is that going to be more of something that could stay here? Or was this just more so just off of the reaction that we got? You guys know, for me, I'm always going to be strong dollar more than anything. So I believe, even though we did have a sell-off right here, I think it's going to be short-lived, right? I would not be surprised if we actually seen the USD Swiss, this actual pair, rebound and continue in this momentum much higher. Because at the end of the day, if we actually take a look, guys, at what the interest rates for the Swiss are, it's still negative, right? Even though they actually raised it by 50 basis points, they're still negative, right? They are still negative rates overall. And you really have to look at this from a foreign investor's type of perspective. And if you had the option of investing into the US dollar or the Swiss franc, which one is going to give you the best rate of return? Like, which one is going to give you more money in return by simply holding that currency? Let me know in the chats, family. Right, so we got Elliot Butler in the building. What's going on, Elliot? Appreciate you. Let me know in the chats. Right, would you rather hold a currency that's going to give you 1.5% on your money, or would you rather hold a currency that's going to give you negative 0.25% on your money? What do you guys think? Right, let me know. right? It's kind of obvious, right? This is kind of an obvious question, but these are things that we have to be aware of, right? Because, yeah, we did have some Swiss strength come into play recently, but I believe that this is going to be short-lived, right? This was just a reaction based off the news that just came out, which, again, was pretty crazy because they weren't talking about raising rates anytime soon. So seeing this occur definitely has an effect, a short-term effect on these markets. But I believe, right, and I could be wrong, and if I'm proven wrong, it is what it is, right? I'm a Forex trader that trades off probabilities, right? I'm not a fortune teller, right? I don't have a magic ball that tells me exactly what the market is going to do, right? But yeah, I believe that even though we had this strength come in, it's going to be short-lived because it still makes so much more sense to hold dollars as opposed to holding Swiss francs because you're getting more for your money, right? You're getting more for your money. I hope that makes sense. You're getting more for your money at the end of the day, right? And I would rather be invested over here in the U.S. as well opposed to anywhere else. So this is very interesting to see. Now, I say that to say this, right? If we look at these world central banks and we look at the interest rates for these world central banks, and now we start to see when the last time they actually changed their rates, every single world bank that's on this list right now, besides two of them, has actually changed in rate and changed their rates this year. Every single one. Right? Look at this. Last change, 2022, right? The only ones that didn't or that haven't changed rates yet is the ECB, the European Central Bank, and then the Bank of Japan. The ECB has been at 0% for years now. Like years, right? Now, even them, probably in their next meeting, I would not be surprised if they also raise rates. Like at all, right? And do something historic that hasn't been done in, 5, 6, 7 years, right? And they raise rates. I wouldn't be surprised about that at all. That's actually their plans. Now, as for the Bank of Japan, who is still negative, right? They're continuing to devalue their currency, which is why we see things like Usdjpy continuing to go higher, right? Even though we had this moment of strong or weakness in the dollar over the past day, it completely got erased, right? Because the Japanese yen is just so much weaker than every other currency across the board right now. And a big part of this is because of how they're actually treating this whole aspect of inflation right now. And there's still negative rates. So there's only two economies that are negative rates right now. Again, the Swiss franc and the Japanese yen. The Swiss franc finally did something literally yesterday, and we see how the markets reacted to it. Let's go back to the Swiss franc. Right? We can see how the market reacted. A pretty big sell-off. So now that brings the question, right? If the Japanese yen in their next meeting, right, which I'm not sure when their next meeting is, I'm really not sure. Oh, it says it right here, actually. Actually, today. Right? They actually had it today, right? Let's actually bring this up and see if there's anything, right? Obviously, it was today. Based on that, I don't think that they actually did anything for interest rates, right? But if they ever do in the future, then we can potentially see a similar reaction to what we've seen occur with the USD franc, the USD Swiss, right? Where we see interest rates do come out a little bit higher, or at least they actually raise rates. And we see that initial massive sell-off for USD Swiss. We can also see that same exact thing occur for possibly the USD JPY. But just like I said, I still believe, even if the USD JPY ended up tanking, I believe it's going to be short-lived if and when that decision ever comes out in terms of the Japanese yen. Right? So these are things that we have to really be aware of, guys, right? We have to be aware of these things, and we have to understand it because, again, as Forex traders, all this stuff is going to affect the overall direction of these markets. Now, let's talk about what actually happened yesterday, right? Because yesterday, guys, we actually did see a pretty strong period in time where the dollar actually lost a lot of value, right? And this is actually a conversation that I wanted to bring up just so that we could pretty much try to figure out why that occurred, right? Because across the board, the dollar seen a lot of weakness come in, right? Again, it was short-lived, which I expected it to be short-lived. But we did actually get a period in time, guys, where the dollar actually did end up going, pretty aggressively to the downside. Now, this is my opinion, right? And again, this is just my thoughts, my opinions, right? Nobody else's. Nobody told me to say this stuff, right? It's just my thoughts and my opinions on why this could have happened. The fact that we actually seen the Federal Reserve finally grow a set of balls, right? Excuse my language if we have people that are young on this call. I didn't curse, but, just that reference, right? But the fact that we actually seen the Federal Reserve finally grow a set of balls and finally pretty much admit to the public that they dropped the ball, and they actually went from the projections were to raise interest rates by 50 basis points to actually raising rates to 75, which again hasn't occurred in years. That might have brought a period or a moment of confidence into the market itself. Now, the crazy thing is, and this is the interesting thing about it though, all right, that also has me trying to, figure out and question what's going on. Even when we did see the dollar actually lose value, the equity markets, right, the asset markets, these indices, they also dropped. Right, which is kind of crazy because typically, again, and this is what I say all the time, right, it's not always where the equity market, the asset market, right, the indice market, all these markets that are considered riskier plays, it's not always that they have a 100% negative correlation to the US dollar, because they really don't. And we can see that obviously by what happened yesterday, right? The dollar absolutely dropped, but yet the indices also continued to drop and continue to tick lower. And that's a question I actually want to go ahead and ask Skaggs, right? And I know it's going to be a echo for everybody that's on the stream, and if it's too much of an echo, I'll just repeat what he actually said. But I want to ask Skaggs this question, right? Because he might have a little bit of insight on why we potentially seen the dollar lose value, his thoughts on why the dollar lost value, and then also his thoughts on why the actual indice market didn't rebound off of that data, right? So Skaggs, bro, are you there, my brother? Let me know, right? Let me know if you can still hear me, right? And if anything, like I said, if it's too much of an echo, then we'll just go ahead and I'll just repeat what you actually said, right? Let me see if the boy Skaggs is actually right there. Oh wait, Skaggs, can you hear me, bro?
Yeah, I can still hear you.
Yeah, I forgot I had you unmuted on the Zoom. So you weren't even hearing anything. Right. But the question that I have for you, bro, and like I said, if it's echoey, guys, we apologize. We'll get this thing situated for the next stream. And I'll just repeat everything that he says. If it's too bad to you guys, so you guys can hear a little bit more clear. But the question that I got for you, bro, obviously we've seen the dollar for a short period in time. We've seen it actually decrease in value, right? That's the first question I have for you, because I really want to get your thoughts on this. Why do you think that we actually seen the market, from the dollar perspective, actually lose value yesterday, even though it was short-lived? But why do you think that actually occurred? That's the first question I got for you.
So you want fundamental reasons? I mean, from my perspective, bro, it's just again, it's about that priced-in kind of data, right? I mean, all week long, since the Sunday open, things, very much kind of trending, continuing that same momentum. And with that, you just get to a point where things are kind of already priced in. The market was pricing in that 70 basis point hike. They were pricing in possibilities of 100 basis point hike. And then once that news comes out, those people that are trading off that same rumor, they take the opportunity to take profits, scale out of things, which very easy to kind of liquidate people up in that range. Be very choppy. So yeah, it goes down. Yeah, very easy for markets to find more demand. And that's actually, this is dollar index, but we analyze this on UJ had all the signs of coming down to the 131 range. And then I woke up today and I seen a recovery. That also does not surprise me.
Okay.
But the thing is, we already talked about, right? We don't need to go into interest rates again. You guys know the yen interest rate being negative. Mm-hmm. Even if the dollar does find these little short periods where it doesn't kind of hold its dominance, those institutions are going to scoop up multi-hundred discounts and come back to the market. Yeah,
all right.
Too much echo. I'm telling you, bro, you gotta download that app.
Yeah,
we'll go away in 2 clicks.
Yeah, we'll download it after this, right? But just to repeat what he said, family, right? He pretty much just said that the market itself was at a period where we could have expected liquidations in the market because of everybody that was up at these levels, right? It was pretty much an opportunity for them to actually go ahead and collect profit, because all this data that we're actually seeing, again, most of it is already priced in, and since it's already priced in, a lot of the big boys, the big institutions, they were probably buying way down here at these lower levels, right? 101, 102 levels. So since we've seen the market actually come all the way out and actually seen a massive run up, when interest rates actually did get released, while again, that's the facts, most people were actually already in, at least the big boys, they were already in positions. So this is a point in time where they're actually able to go ahead and liquidate some positions, so that they're actually to go ahead and able to go ahead and collect profits and take profits at the end of the day, right? So that's definitely a good insight for sure on why this could have occurred. But again, it's more so this, again, for me, I didn't really truly, I expected some type of a correction, but not nothing too crazy, right? But I also expected the rebound that we seen, right? Like the rebound was definitely very, very expected. It was something that I feel like was gonna happen, which is why I actually started buying the dollar against various currencies even after we seen a lot of momentum come in, because my bias and my sentiment has not changed, right? I say this all the time, guys, right? As long as the sentiment does not change, you stay with what the trend has been. You stay with the momentum, the overall momentum, the overall order flow of the market, because the data has not changed, right? And this is one thing that I've been really, really just learning a lot more, guys, right? Because typically when we're looking for reversals in the market, right, most people, and again, it's something I used to do as well, when I'm thinking of a reversal, obviously I used to think about reversals. Damn, that's super loud. Right, shout out to you, Tori. What's going on? What's going on? Shout out to you. I appreciate you. Let me actually see if I can just turn that off for right now. Give me 1 second, guys, because that is going to be super, super loud. Right, but like I was saying, when it comes to like thinking about reversals in the markets, right, when we're thinking about reversals, usually we're trying to look for reversals in terms of more structured patterns, which is obviously definitely important, right? You have to understand when a reversal can occur, or at least when a pullback can occur in the market, because looking at technicals can give you that little bit of insight, right? But when I'm thinking of reversals now, right, and this is completely different than how I approached the market even 2 years ago, right? Because when I'm thinking about a reversal now in the markets, I'm thinking about it from more of a sentimental perspective, right? So now I'm not changing my overall bias in a market unless the actual sentiment of the market changes first, right? Because the fundamentals and the sentiment is created usually way before, or I'm not going to say usually, right? But the fundamentals and the sentiment can be created before the technicals even shows it, okay? So that's how now I'm going to be approaching these markets. I'm looking at it from more of a, okay, has the sentiment changed, yes or no? If the answer is no, then I'm still staying with the trend. I'm still staying with my idea was of the market, my overall macro outlook of the market, and I'm still going to be positioning myself in a way to take advantage of those opportunities, especially if we see it, like for the Usdjpy example, right? Where Usdjpy absolutely tanked. When I see things like this and I see that this market is collapsing, as long as my sentiment does not change, I'm not going to say, oh man, this thing could continue lower now. I'm not thinking like that because sentiment hasn't changed. What I am thinking about now is like, oh man, this is exactly how I thought. I'm like, wow, this thing tanked crazy. Now the market is extremely discounted. Right now we can actually go ahead and get back in line with our actual sentiment, and we can even get in at a much better price. Because now we have to think about discounted versus premium opportunities in these market. And when this drop actually occurred, I wasn't thinking about, man, maybe this market is about to reverse. No, I'm thinking, man, okay, now I have a much better opportunity to find an entry because it's going to be giving me a much discounted price. I hope this makes sense, guys. But let me just go ahead and mute this. Actually, let me go ahead and just lower this real quick because that alert is extremely, extremely loud. All right, so let me see what we got here, right? Let me lower this. Yeah, lower this 38%. Let me lower this. Let me lower this. Right now, hey guys, if you guys are getting value, man, I really need to know in the chats, right? Because again, this is real, actual, real, authentic information that can absolutely change the game for you, right? Like it changed the game for me, right? And again, this is somebody that's been trading for 7.5 years, right? And I feel like over the past year and a half, Like my trading has exploded tenfold because of now I'm understanding sentiment, I'm understanding fundamentals, and I'm understanding how it all plays together a lot more. And when you do that and you understand that, is again truly going to change the game overall for you. All right, so I just lowered the actual alert as well, so hopefully it isn't too crazy, right? So now, and again, I get it, guys. I know that there's an echo, and I know it's gonna be a little annoying to hear. I apologize, right? The professionalism will increase, right? The production will get better, right? Especially when I want to have guests on here. But I do want to ask the boy Skaggs another question, and again, I will just repeat his answer because I get the echo is bad. I don't have time right now to download anything of these apps, and we'll do that after the stream to make sure that the next one is better. But I do want to ask this question, right? Now, Skaggs, right? In terms of the market itself, right? Pretty much from the dollar perspective, we've seen obviously some liquidation occur overall, which got completely erased. But from the actual indice perspective, why do you believe, right? And again, I want to know your perspective on this because obviously you're much better when it comes to understanding if news is being actually priced in than I am, right? That's still something I'm working on, understanding when data is getting priced in and understanding how to read that and react to that. But in terms of the indice as well, right? Why do you think the indice market is still going much lower, even though we had this news, this data that came out, right? We're seeing the reaction. We've seen an increase in rates, 0.75%. I was expecting some confidence to come in, which obviously it probably did, but I was expecting some type of a little pullback. Now, why do you think the indice market is still dropping the way that it's dropping? Let me know in the chats, or let me know right now, and I'll repeat it if the echo's too bad.
Yeah, so for me, I was with you, bro. I mean, you know that. I had also expected that, and I asked myself the same question yesterday because I did see the dollar weakness, and I'm like, man, this is just not translating into indices. It also didn't translate into crypto. So a few assets, yeah, they really struggled to recover, and I was in buys on Nasdaq post Fed news. I was personally. We did scale some out on the first little bit of liquidity grab there at the 700 levels on Nasdaq. But I really think what it kind of comes to for the indices is they also had some bad retail sale numbers the same day. So I think the same day that the Fed came out, we also had retail numbers that came out lower as expected, worse than expected. So I think even though the Fed did give a little bit of confidence, it wasn't widespread into markets that were also having issues, right? Because the crypto market has a lot of issues with hedge fund liquidations right now, like 3AC and stuff like that. So in my opinion, I think it's just a combination of those retail sales and the fact that the dollar recovered so quick kind of speaks a lot about, you know, how long that confidence was actually able to last.
Okay. Yeah, now that's definitely a good outlook for sure. And that was honestly my thoughts as well, because obviously, you know, consumer confidence and just confidence overall as a whole is really what creates sentiment, right? If you guys are wondering how to really figure out what sentiment is, I mean, there's actually indexes and indicators out there that literally tell you the confidence of the market as well. And right now, guys, especially from a consumer standpoint, we're talking about the confidence is been extremely low, right? Like next level low, right? Let me see. Yeah, there it goes. No echo. Actually, let me ask you guys this question, right? Because I actually just did something as well over here on my OBS, and was the echo gone? Let me know, because I actually just muted something that might have actually solved the actual echo problem, right? So Skaggs, bro, let me know. Say something against Skaggs, bro, so we can really see if the echo was gone or.
Yeah, we testing. Can you hear me? Let's see if it's fixed.
Yeah, go ahead and drop a 7 in the chat, or write no echo family if that was fixed. Let me know, because I think I might have just did something that might have helped for sure, right? And if we fix this echo problem, then we really about to get into deeper conversations. No lie. Okay, all sounds good now. Yes, it was gone. Okay, no echo. Okay, now let me see if I keep my mute, because I keep on muting my Zoom as well, right? But I'm gonna leave my mute or my Zoom unmuted to see if that also worked, right? So Skags, bro, how's your day going, my brother? You having a phenomenal day? How was your trading week overall?
Honestly, bro, it was it was pretty light. I think I took a total of like 3 trades all week. One being the Euro USD buy that we lost 0.25% on. Then we hit those Nasdaq longs that we took 30% profits on, and then we took another Nasdaq trade which we ate an L on. So I actually went 1 and 2, but we still ended up a little bit above positive. I'll say it's pretty much a break-even week though.
Okay. Not bad, not bad. Now, family, how was the sound right there? Let me know how was the sound right there, because that time I actually kept it unmuted on the Zoom. Oh wow, now we're cooking. Okay, see now it sounds like we're good to go. Oh yeah, we good now. Okay, there we go. It's because I had two audios actually on my OBS. I had my actual mic audio, and then I had something called a. I don't even know where this desktop audio actually came from, but that was on as well. So I muted the desktop audio, and now it seems like we good to go. See, now we can really have deeper conversations. So this is amazing. And again, like I said, guys, we're definitely gonna improve the production because there's actually a ton of softwares as well where me and Skaggs is actually really be on the screen, really just having these conversations as well. So it's not just you guys are looking at just my pretty face, but you guys can look at his too, right? So we're gonna get better with this as we continue to go, right? But overall, I'm glad that we're able to get the audio fixed, and I know I'm excited about that. So very interesting, guys, to see exactly what the market has overall done, what we can expect. Now, Skaggs, another question for you, because again, family, if you guys do not know who Skaggs is, this is somebody that I consider as one of my mentors, right? Somebody that, yeah, we came up in the game together, but this dude is extremely, extremely knowledgeable, right? I like to call him a freaking walking encyclopedia because he always has some type of insight in the markets, because he's the person. And again, I'm gonna be honest, I'm not the one to really sit there and read transcripts and read press conferences and figure, but this guy is, right? He actually enjoys actually looking at the all that stuff and really create perspective, right? So now, again, I think I might have just asked this question, but I want to ask you again, right? In terms of the indice market, in terms of the market as a whole, Skaggs, what is your perspective as the market as a whole, right? Not just the indice, but as the whole, like especially for a lot of these currencies that a lot of people like trading, dollar correlated currencies, the major pairs. What is your overall insight of the market as a whole? Do you think we're bound to expect a deeper correction for a lot of these assets that have been flowing, or should we expect more continuation in the directions that they've been going? Let me know in the chat, or let me know right now so that everybody else can know.
Honestly, bro, I do expect things to kind of continue on their same path, at least for another six or so months, 6 to 9 months. And that's just taking decreases, right, in valuations. So yeah, expecting that the Nasdaq US 30 to continue to push lower. Bitcoin will probably easily break its 20K mark. Same thing with Ethereum, sub 1,000. When it comes to currencies, things like Gbpjpy USD, Euro USD, I'll be honest with you, I haven't been trading them, and there's a specific reason, right? So, like you were kind of showing before, a lot of these countries have done rate hikes, right? A lot of these central banks have done rate hike changes this year. And a lot of them are either just starting, planning on doing more. And what you get in an environment like that is a lot of tug of war, right? Because the news is going to come out that the euro's hiking, so people are going to kind of, play off that rumor and flood into that. And then the Fed's going to do another hike, and then we're going to run into that. And we're just kind of go back and forth as all countries begin to hike. And yeah, the dollar was the, first to the field, right? We're kind of leading the way there. There are a few currencies that have a higher interest rate than us, like Russia being one of them, China being another. Again, these are not pairs most people trade, but nonetheless, they do have higher rates, I believe, right? Like what's you have it on the screen now. So Russia is down there like at 9.5%, right? So yeah, there are currencies that are sitting higher, but in terms of the major pairs, the Fed is leading the way. So the big question is like, where do you want to play inside of? Do you want to play with these currencies that are going to begin competing in rate hikes, or do you want to trade in the assets that are consistently being devalued? For me, I'd rather play on that side. I'd rather play in the indices. I'd rather play in gold, oil, just because they're going to trend, in my opinion, nicer than some of these currencies going forward. So just stuff to consider, because the euro is going to continue hiking, GBP is hiking, You have the Swiss franc now, which is hiking. So even though they're still negative, they can get more aggressive. They could start doing 100 basis point hikes. They can start going up by 1%. If they do that 2-3 times in a row, they're going to be right there where we are. So don't underestimate how some of these countries can kind of come back.
100%. Now, obviously, the whole situation with Russia and Ukraine is why their interest rate is almost at 10%. It's because their currency was absolutely getting destroyed, especially with sanctions and all that good stuff, and a lot of countries and economies not willing to follow by their rules, because Russia is trying to play they're trying to play hardball, right? They're saying, yo, if you want to buy stuff from us, it has to be in the ruble, and every other country's like, yeah, that's not gonna happen, right? So they pretty much had to create like a fake boom in the economy, or try to boom it up in some way, and obviously they also had to see that their inflation was going through astronomical heights, and now they had to raise rates so crazy. All right, but that's very interesting to see, though, where that is at 9.50%. I believe it could even go even higher. All right, I think it actually did go higher at one point as well.
Yeah, I mean, if you look at the chart, they're definitely smacking the USD around in terms of charts.
Oh yeah.
They completely erased the move by saying it's been done. Like, honestly, taking a long on the ruble is one of probably the better fundamental plays you could have taken since the whole sanctions and everything. And I know that's gonna sound weird, but like if you look what they put the sanctions in, and they made those rate adjustments, and still it's gonna just stomping all over the dollar, right? Even though people look at that country as like, yeah, what they're doing is wrong and stuff, but money still talks at the end of the day. That's what you're seeing there.
100%. So, let me show it in this perspective.
And they also did something where they pegged the ruble to gold as well. So they've made some big adjustments in their economy.
Yeah, it's very interesting to see how that ends up playing out for sure. Right, but let me go ahead and give you guys my opinions, guys, and my thoughts on what we could potentially see actually happen next for a lot of the major currencies. Obviously, you guys know I love analyzing the dollar. I love the index itself, just because it just, in my opinion, just makes it so easy to really understand what other currencies are going to do. So with this type of rebound, right, I actually drew off this key level right here, and I mean, we seen price literally again collapse yesterday over the past 2 days. And then we seen it ultimately really come back up and rebound pretty quickly, right? And now we're trading again for the dollar, guys. We're trading literally right back above, this key level of 104.5, right? And I think that we're probably going to see continuations higher for the dollar itself. Remember what I said, right? As long as the sentiment stays the same, then the trend needs to stay the same as well. And I just believe the dollar is just going to continue to increase. It's going to continue to benefit, right, from obviously everything that we're experiencing in the world, all this chaos, all this uncertainty. Obviously, rates going up as well is going to cause the dollar to continue to increase in value. And I mean, right now, like, we just had again a historic move with a 0.75% interest rate hike. But don't be surprised, and again, I might be talking a little bit prematurely, but don't be surprised if even the next meeting they do something crazy like that. Right, because now they're proven, right? Jerome Powell and his team has finally proven that they're doing stuff. They're taking a lot more of an aggressive approach to really finally try to combat inflation. That's what we've been wanting, right? They completely dropped the ball. So even if they have to raise rates another 0.75, I don't know if it's really going to happen. It might end up going back down to 0.5, depending on, I'm not sure when the next CPI reading is getting released, but it's going to be either a 0.5 or it's going to be a 0.75 interest rate hike again. And as long as they continue to do that, that's going to continue to make the dollar a lot more attractive, and it's going to continue to make people hoard the dollar as well, because again, it's going to be more expensive to actually borrow and invest and take. I mean, everything is going to continue to go higher. So that's just going to continue to value the dollar much higher. Now, this is also something we have to understand as well. Once we finally do start to see inflation either create a plateau, like, and this is hypothetically speaking, right? But if inflation during the next reading, if it comes out lower than we just came out as, that's going to bring some type of optimism in the markets. Because now there's going to be a lot of big time players making those predictions on, like, man, did we actually reach that high? Did we actually top out in this market? Is it possible for inflation to finally start coming back down? And once those ideas start to be created, sentiment is going to be created as well off that. And once sentiment starts to be created off that, then that's when we're going to start to see the market also react to that sentiment. I hope that makes sense, guys, right? Because when we say all the time that we need to start being aware of what's happening from a rumor is very similar to sentiment, because the big dogs are playing the rumors and the big dogs are positioning themselves based off what they believe the sentiment is going to be. So that's something that we have to be aware of, right? Because once interest rate or once inflation does start to come back down, they're going to go from the process of quantitative tightening, which is obviously what they're doing now with raising rates. Most importantly, they're reducing their balance sheet, and they're going to go back into that more so quantitative easing process where they're lowering rates, but they're also going to start printing more money again to try to stimulate and keep this economy high. I keep on saying this, right? But Jerome Powell and that whole team, they have one of the toughest jobs in the world right now, because trying to fight inflation while trying to keep this economy from going into recession is a very hard thing to do, right? Their whole mission right now is to combat inflation while still trying to keep the job numbers strong, while still trying to keep the economy strong. And it's like an oxymoron. That's hard to do. It's been proven, right, in the past that every single time we start to raise rates tremendously, the market ends up tipping into a recession unless they change course ever so drastically, right? The last time they did that was back in 2018, 2019. Obviously, when the administration was under Trump, they were actually starting the process of quantitative tightening. They were starting to reduce balance sheets. They were also starting to raise rates just to try to pretty much stimulate things. But Trump is like, no, don't do that. Keep the rates low, keep the rates low, keep the rates low. And they ended up switching course really, really quickly, which also caused for the market to absolutely continue to skyrocket the way that we actually seen. And when I say the market, I'm talking about more so the stock market, equity market, asset markets, and things like that. So these are things that we have to be aware of, guys. Again, this is the how would I put this, right? This is the part of trading that 99.9% of traders don't focus on. But that's also a big reason why most traders are not successful in this game, right? It's because this aspect, this type of conversation, really understanding things from an economical standpoint is what's also going to put you in a much better position when you're actually trading, right? Because now you're not going to be so caught up on what trend lines and what supply and demand and what support and resistance and all that stuff is doing, and you can really understand what the overall scope is, and then you'll be in a much better position overall. And that's why I'm so excited. Again, just a shameless plug. That's why I'm so excited about the boot camp, right? Because during the boot camp, we're going to be talking in depth about all this, right? We're going to be going in depth on data, fundamental data, sentimental data. We're going to correlate it to the charts, and then we're going to also correlate with the data staying and correlate that from a technical standpoint, so you guys are aware of what to look for from a technical perspective. And when you do all that, that's pretty much going to play in, right? Now, Skaggs, I actually have another question for you as well, bro, because I actually had a question that was asked to me on Instagram, right? And I feel like it was actually a very, very, very good question that honestly, like, I've thought about, but I really didn't put too much mind, right? So, Winston, if you're still on here, I appreciate you for this question. This is actually something that I want to actually do a lot more with you guys, because I get a lot of questions, obviously, right? I actually want to bring a lot of these questions that I get asked literally right to the platform, right? Because it was a really good question, right? So, Skaggs, I got this question for you, right? And my boy Winston, he actually sent me this last night, and I gave him my opinion, my thoughts and my opinions on it, but I want to get your thoughts and opinions, right? So the question was, he said, right, he actually said it via a voice note, but he was pretty much talking about, obviously, this whole situation with Russia and Ukraine, right? Where the U.S. is literally giving Ukraine billions and billions and billions of dollars worth of support. And the question that he pretty much asked is, how is that going to pretty much play out with inflation, right? Is all this money all this support that's being sent to Ukraine because of Russia, is that going to tremendously affect inflation and the monetary supply, or how is that going to pretty much play out with all this? Because they literally just approved another $1 billion, right? Now, obviously, that's going to be a mixture of, yes, it could possibly be money, but it's more so a mixture of a lot of weapons and artillery and things like that as well. But what are your opinions on that? What do you think that all this support that we're giving to Ukraine, how is that going to affect us over here in terms of inflation? That's a really good question, in my opinion.
Yeah, so when it comes to like additional support, like you said, first off, it's not, they're always not just sending, like $1 billion check. It's usually not what they're doing. They have done it, they do it, but we had to kind of look, and I haven't looked into it personally, what they're actually sending, what makes up that $1 billion. But if you really want to know how this impacts, you kind of just have to look at where that money comes from. The U.S. routinely, year over year, spends, billions of dollars on foreign aid. So it is possible that they cut the money from other aid programs that they have. It doesn't always mean that they're, printing out a new $1 billion and just sending that over. That's not always what that equates to. This $1 billion could have went to, a handful of other things that they're already spending money on. So I wouldn't really worry about this stuff too much. The only thing that gets people worked up is like, they're like, oh, why send $1 billion overseas when we could spend that here? But the truth is, we spend tens of billions, if not hundreds of billions, every year providing support all over the world. That's what the U.S. does. We're like, we're that force that has to keep everybody in check. Not that I very specifically always agree with that, but we're everywhere all the time doing all sorts of things. So that's where that money comes from. It just comes from that already pre-approved spending for the year. So yeah, I wouldn't worry about it too much, to be honest with you.
Okay. Yeah, that's definitely a good
From an
insight for
inflation
sure.
standpoint, anyway, you can make your arguments against how we're using that money, but it's contributing to inflation, not really a factor.
Okay. Now that's definitely a good answer for sure, and definitely a good insight. Because obviously that's something that I was definitely thinking about, but I really didn't know for certain like how that was actually gonna play out neither. Right, but let's see. There's actually a question just to ask once and for all: did the stimmies really do this to do this to us? I mean, obviously, stimulations definitely, or the stimulus checks definitely played a big part. And I'm not just talking about stimulus checks to the everyday person, right? The 1,200 or whatever it was, right? Like there was massive bailouts that were occurring across the board, right? There were bailouts for the largest institutions in the world, right? The largest are over here in the U.S., the largest corporations. So stimulus as a whole, yes, right? You got to understand, right, how much actual dollars was pumped into the economy in such a short period of time. Now, it's not just the stimulus checks that obviously did that. The whole COVID thing is pretty much what really fueled this entire inflation thing that we've seen, because it's a combination of a lot of things. Obviously, all that printing of money is a big part, but also the fact that we had supply chain issues because of COVID as well was causing it a big part, right? It's a big mixture of a lot of things, right, in my opinion. But the stimulus checks and the stimulus packages and all these bailouts that occurred, yes, that definitely played a major part in everything that we're experiencing right now and all this inflation that we're seeing, right? Because everybody was so happy saying, oh yeah, we're getting free money for the government. Nothing is free, by the way, right? Because now, because of all that quote unquote free money, now gas has literally doubled, almost tripled in value. The price of goods has continued to skyrocket. We're paying more for a gallon of milk nowadays, right? So yeah, at that time, from a hindsight perspective, for everybody that's not educated, yeah, that's free money to them. But now we're pretty much paying the recourse because of that, right? And we're dealing with higher prices overall because of that, right? So everything in life is not free. I promise you that, right? If they're giving away free money, it's for a reason, which was to, again, stimulate the economy and keep it from crashing. But ultimately, now we're also dealing with inflation because of that. Now, Skaz, what do you think about that, bro? Is there anything else that I messed up on, or that you want to add to that?
I mean, you basically hit it, the nail on the head there. A few things that I would add is we were headed down this path already pre-COVID. Obviously, what that does, because there's always going to be some sort of peak event at both sides of the cycle. It's just how the world works. The market was basically, walking on thin ice as it was. So yeah, once that kind of comes in and that's all it takes, then the whole system kind of gets thrown into a whirlwind. All the money printing, does it contribute fully to the inflation? No, we would have seen things like this happen anyway, just based off the supply chain. You would have still had things kind of going up. When supply chains get constricted, that's exactly what happens. It's why PMI goes up and then CPI goes up, because everybody's paying more, because there's just less things out there due to people not working and whatnot. But I will say, like, all the additional money printing, what that really does is it adds to the volatility, because it's now just more money to be exchanged on both sides. So what you're really just seeing is like those checks they sent you, that just adds to the volatility, right? All the money they bailed everybody out with, that all adds, to the volatility. So that's why you're seeing like bigger candles, much more activity, is because there's just more money supply, more actual volume being exchanged around. So that's what the checks actually do. And to be honest with you, they give you those stimulus checks, for what's happening now, right? But they when they feel the need to send out money to people, it's because they already know what we're experiencing now is coming. Because all the hints were there. You could have, I mean, again, we've been calling them dollar buys for this very reason, for over a year. Because again, the writing is on the wall. It just hasn't hit the individual person yet. So the checks are meant to help you in this time. The problem is so many people are hurt from the pandemic and stuff like that that it doesn't even last this long. So you kind of come into a point where it's like, yeah, they sent you the money to help you with this period of time, but it's, it was sent too early. And again, 99% of people are going to use it in the moments, whether it's stuff they need or just they blow it, whatever it may be. So yeah, it's not like they didn't see this coming. They saw this coming. That's why they gave you the money. And you can argue it's, it's not enough, but that's always what it is. It's never going to be enough. The government's never going to send you enough.
Yep, that's a
Nor
fact.
should they have to.
Yeah, right. Yeah, definitely. So again, everything that we're experiencing now was something that was, again, pretty much a cause and effect of what actually happened in the past, right? But there's a question. So positive sentiment calls it a bullish dollar or bearish, right? It really depends on what you mean by positive sentiment, right? You really want to look at sentiment from pretty much two aspects, either risk on or risk off sentiment. When we're risk on, that means it's time to get riskier, invest into riskier plays. Now that just means that there's a lot more optimism and a lot more faith in the economy as a whole, and we go risk on. Where risk off means that there's no faith, there's a lot of fear, a lot of uncertainty, and a lot of doubt, and it's time to go ahead and get involved into a lot more safer plays, safer investments, and things like that. All right, so that's pretty much what sentiment. All right, but let me go ahead and just give you guys my outlook, guys, on what I think a bunch of these pairs are going to do, and then we'll just get some final thoughts. And then I'm going to go ahead and wrap this thing up, right? But overall, guys, I'm still going to be, personally speaking, as of right now, until the sentiment changes, I'm still going to go ahead and continue looking for dollar buys on a lot of assets, right? So talking in terms of Euro USD, I think that we're eventually going to see a lot more downside for the Euro come into play. Obviously, as data comes out and as sentiment changes, we could probably relook at this. But for right now, I believe we still have an opportunity to really see a lot more bearishness overall to eventually come into play. Now, the question is, though, all right, Abel, but where can we look for some opportunities to really go ahead and get involved in? Right. Well, what I'm going to be looking for going into next week, because right now I'm pretty much done for the week. Right. I'm not in no positions. I'm out. I actually took a USD CAD buy earlier today that absolutely played out tremendously, but I'm pretty much out the market as a whole. And what I believe that what I would like to see overall is now seeing how Euro USD does react at some of these key levels that I'm pretty much marking on the screen right now. It's very, very possible, guys, for Euro USD to come back up to this level, react off of this level right here. It could just range in here for a little bit, but then I want to see more downside. And even if we do see price actually rebound a little bit higher, that's fine, because then we have another key level up here at around the 1.045 or 1.054 level. And then similar concept, I'd like to see the market go ahead and react from there. But I do believe we're going to see a lot more downside, in my opinion, for the Euro. And that's probably pretty much going to be a similar thought process across the board, especially for the Euro, the pound, and the Australian dollar, right? So Gbp USD, also very similar. I believe we're going to see more downside. I really wish I would have been able to take an opportunity just to short these opportunities right here when the market did give us that strong initial strength against the dollar. I was all for it. I just don't know what the hell I was doing. I think I was not paying attention clearly. Right, but what can we expect next? Again, very simple. I think that we can see price pull back up into this area, 1.2286, and then from there, possibly go ahead and send us much lower. Another area that I will also keep in mind on is going to be this level right here. I'm just going to use a line for this one. All right, this 1.233. That's also will be another opportunity for me to really have confidence in going ahead and get involved as well. But overall, I still believe we're going to see more downside, right? That's just my opinions, my thoughts. So that's what I'm going to be personally playing off of, especially if we're able to really go ahead and clear this, this 1.217 level, 1.218. If we can go ahead and clear this level, then I'm definitely going to be interested in looking for more downside for the pound. Australian dollar, very similar. Again, most of these assets, obviously, that are, traded against the dollar are all going to be very, very similar, especially the ones that end in USD. We could see a short-term pullback, but then ultimately I want to see more downside as well for AUD USD. So for anybody that's trading these pairs, that's my thoughts, my opinions. This is not me telling you guys what to do. It's just me giving you guys an insight of how I'm going to be approaching these markets going into next week. And again, if I'm wrong, I'm wrong. It is what it is. If I'm right, it is what it is. I really don't. And this is the thing I want you guys to really get, guys, right? Don't get too caught up on focusing on being right and being wrong. All right, like there's going to be opportunities when you're right. There's going to be opportunities when you're wrong. It's a part of the game. So I really don't care on if I'm right or if I'm wrong. It is what it is, right? And you got to treat it that way, because once you get different information and different data, then you're supposed to adjust, right? The best traders adjust, right? That's why I say adaptability and your ability to being able to adapt to the market conditions that are being shown, and being able to adjust is one of the key components of being a profitable trader. So I think we could see price come up to here, and ultimately another area that I'm very interested in for AUD USD, and this is something I'm actually going to be really taking advantage of if we get to these levels, is going to be a shorting opportunity from this 0.702 level right up here. If we can get all the way up here, then I'm definitely going to be looking to short AUD USD to go ahead and ultimately take out these lows that we have down here. Right, that's my goal, that's my mission, that's what I'm looking for. This is gonna be my blueprint going into next week, and yeah, only time will tell obviously on what actually happens from that. Now in terms of USD CAD, guys, like I mentioned, I actually did take a nice buy opportunity last night? Let me check. All right, I think it was like middle of the night where I actually took it. Let me look at what my actual entry was. All right, so it was 1.2947. All right, 1.29, so it was somewhere around here, right? 1.294742, right? So it was, yeah, last night we ended up taking this. Again, I seen the market was pretty much in this range. We did see that massive, or not massive, but we seen that sell off that pretty much occurred across the board. And then we also seen the market pretty much ultimately really come back and rebound. Right, so once we actually seen price come back up to this level of structure, I ended up taking buy opportunities right here, and I ended up riding it out. I didn't ride out the whole thing. I ended up getting out up here at these levels. So ultimately, it wasn't a bad trade. It was around maybe 60, 70 pips I caught, and that was just aligning with what my bias ultimately was. Right, remember, I'm bullish the dollar, right? Especially when we see things like this, right? This type of momentum to the downside, which got completely erased. Like that in itself you have to be able to read that type of price action to understand where the momentum's going next. So that's why I was able to get into this buy this morning, and it was pretty much one of the only opportunities I took from last night going into today was that buy. I actually did take a NAS sell as well. I actually took that on the actual funded account, and it played out pretty good as well for me. I ended up taking sells at around 11,290 for NAS. Right, 11,290. I did end up closing out as well, and I'm actually very excited that we did, because this thing ended up rebounding. But I did end up taking shorts literally at this level as well for NAS, right up here in these areas, right, when price spiked all the way back up with a lot of momentum to start the actual New York session. Again, my thoughts and my opinions were that this is probably going to be short-lived, so I ended up taking shorts up here at 11,290. And ultimately, I was able to really ride this thing all the way back down to these lows that we have right here, and I was able to go ahead and close out. And I made a good chunk of money as well in this position. But those are the only two opportunities that I pretty much took today. And again, I really looked at it from more of a sentiment and a fundamental bias first, and then I just used technicals to really help me identify when it was time to actually go ahead and get in. Now, in terms of cryptocurrencies, I still see more downside for sure. I need Bitcoin to hurry up and finally smack this 20,000 level, right? We were very, very close to the 20K, literally around $50 away. But I just want to see price smack this 20K level, and then what happens after there, I really don't care, right? So that I can hurry up and already finish these bets that I've had going on for literally over a year now, right? I made bets literally a year ago. Like, I kid you not, a year ago I made bets telling everybody and making predictions that Bitcoin was going to collapse, was going to reach 20K before it reached 80K, and we're literally only $500 away from that bet actually being solidified, and I'm up a nice little check off for those bets alone, right? So I want to see Bitcoin continue to drop. I think we could definitely go ahead and see more downside, especially with the scope of the overall market, where a lot of people are very scared to actually, take chances on riskier plays like Bitcoin. I just see a lot more liquidation occurring, especially with everything that's going on with these bigger cryptocurrency exchanges, and all that stuff is not bringing no confidence at all. So I still see a lot more downside, or not a lot, but I see more downside as well for these cryptos. All right, and let's see what else we got here. Can you check EA? Yeah, I'll check EA. Let's see, bearish on all pairs ending with USD, right? That's pretty much my thought process for right now, coin, for sure. Right, so look at gold, Usdjpy. Yep, I'll take a look at those. I'll finish with EA, right? I'll finish with EA after I look at gold and Usdjpy, right? So for gold is very interesting, right? Gold is very interesting because obviously gold itself is typically looked at as obviously that safe haven type asset, that risk off type of asset, risk off type of play, where typically, not always, right, but typically gold usually likes to benefit during times of chaos. But gold has also been struggling tremendously, at least as of lately, against the dollar itself, right? US dollar has been daddy dollar for a reason, right? So that's why we've seen, even though when risk off sentiment really started to increase, we started to see gold just still tank against the dollar. So I would not be surprised if for some reason we actually see gold, come and start trading much lower. Now, from a long-term perspective, from more of a macro perspective, I do believe that we will probably finish this year with gold above 2,000. That's just my opinion. That's my thoughts, right? It's just my thoughts. I could be wrong. But I believe from more of a macro perspective, I do see gold ultimately really rebounding tremendously and giving us a lot much higher prices, right? So that's just my general outlook for gold. I believe there is some short-term bearishness that can continue to come in, but ultimately, I do eventually expect this thing to rebound. Again, that's just my thoughts and my opinions. Gold could very easily bounce off of this key level that we're at now and continue going higher. And if that happens, then I'll just adjust and I'll, take advantage of it if that were to actually happen. Right, so that's just my thoughts on gold as well. Let's take a look at USDJPY. Dollar yen, again, I'm a big fan of. I think very simple. Not going to take too much time with this. Right, I would love to see price pull back down to this 133.6 level. Hold that level and then ultimately go ahead and continue its bullishness much higher, right? It doesn't even have to reach down to this level, right? It could just continue going at any of these minor key levels, right? But I would love to see price ultimately come down to 133.6 and continue going higher, right? Very simple. As long as we stay above these levels here, we should see a lot more higher prices for dollar yen overall, right? So that's just pretty much my thoughts, my opinions for USDJPY. I want to see more upside to continue. And let's go ahead and take a look at Eurusd real quick, right? And then let's see, thoughts on GJ. Y'all take a look at GJ as well, right? So Eurusd as well. I mean, for the most part, this market really hasn't done much for the past few months. It's been very, very range bound. Like, look at this, right? We pretty much just been going sideways overall as a whole. But what is my overall bias for Eurusd? What do I think can actually happen? Well, I would not be surprised if we did actually see some sort of a pullback in this market, right, where we actually did see, the euro actually gain strength against the Australian dollar. But ultimately, I'm going to be expecting more downside eventually for this specific pair. And the reason why I believe that is more so because the flow of the market has been bearish, and also because the Australian dollar interest rate, if we look at interest rates and we're going to use that argument, right, it is higher than the actual ECB as well, than the euro's interest rate. And just Australia as well is just, they're just approaching how they're reacting to this whole situation with inflation a lot more stronger and a lot more aggressive than the Australian dollar, right? So my opinion and my guess, this is just my guess, we see a push up, but then ultimately I think that we could see much more lower prices for Euro Aussie, right? That's just my opinion, right? That's just my opinion. That's my thoughts. So that's how I would be approaching it if I was actually looking for an opportunity. All right, now GJ. All right, let's go ahead and look at GJ. Right, so I've been a bull for GJ. Right, I've been saying this for a while now, but I really think, right, that we see GJ eventually reach this 175 level, right, which that is actually a pretty far ways away, right? That's what, almost 1,000 pips away, right? Yeah, 1,000 pips away, right? So we got a lot of room to go to the upside, in my opinion, and I'm just looking for more opportunities to continue to buy the pound yen, personally speaking, right? So what I'm looking for going into next week, we are coming into interesting levels of structure that we could potentially see actually hold. So I would like to see price come back down to either this 164 level, hold and continue going higher, or we might even see a little bit of a deeper correction at 163.6, 163.7 to then again go ahead and continue back to the upside, right? So this is just my blueprint, what I'm going to be looking for going into pound yen, going into next week. I think that we continue seeing a lot of momentum, especially now, because I mean over the past week, you know, we did see a nice liquidation period or a nice distribution period for pound yen, right, where the market did actually end up going much lower. But we also seen the market spike below this level of demand, find absolutely a lot of momentum and increase and break structures, break previous levels of structure. So now I think the momentum has finally shifted. The order flow has now finally shifted back to the upside. So I will be looking for more opportunities to actually buy pound yen. Now, even if we do, right, because I do see a little imbalance down here, even if we do end up going much lower, my last opportunity to buy pound yen will be down here at around the 162 level, right? That will be my absolute last chance. And if that doesn't hold, then I'm just going to expect more downside overall. All right, so that's pretty much my opinion, my thoughts on GJ as a whole. Overall, it's going to be a very, very interesting week coming up. As long as you guys really understand where we're at and what's going on in the world, especially from a fundamental and a sentimental standpoint, it is going to continue to help you out overall. If you really want to get a lot more insight, guys, on how fundamental and sentimental analysis works, I highly recommend you guys to participate in the boot camp that I actually have going on in about 2 weeks. It's a 5-day boot camp starting on June 27th all the way to July 1st. 5 days. Each day is going to be a specific topic where we go all in on really just breaking it all down. And again, one of those days, day number 2, is going to be really understanding fundamental and sentimental analysis. And then day number 5 is going to be pretty much putting it all together, right? Understanding mindset, understanding fundamental and sentimental, understanding from a technical standpoint as well, how to really correlate it all together. And it's just going to be pretty much creating a blueprint for you guys and creating a bulletproof strategy that you guys can follow. And hopefully it helps you guys really become profitable and consistent overall. Right, but overall, family, I do appreciate you guys. I want to go ahead and ask the boy Skags one more time if he has any thoughts, any opinions that he wants to just go ahead and give you guys, any last words, because I do appreciate his time. I appreciate him coming on here and just providing you guys with some more value. So Skags, bro, if you're still there, let me know if you have any last minute or last comments that you guys want to go ahead, that you want to provide to the family, the people that have been watching. And just any type of advice that you might have for them throughout this journey, bro, would definitely be appreciated.
We honestly don't have too much for you guys. I would say it is Friday, so if you are not spending the weekend doing some sort of back testing, chart time, adjustment to your strategy, looking over your trade, if you're not going to use this weekend for any of those things, then your trading next week will probably showcase that. So go rewatch a lot of the content that Abel put out. There's also some good stuff on my channel if you guys want to check that out. But yeah, just make sure you guys use these weekends well. Stay hydrated out there if it's hot where you guys are at. But I do appreciate you, Abel, for having me on, man. Shout out to everybody that is in the.
Damn, I thought I lowered that. But yeah, I appreciate you guys. Again, if you guys really want to go ahead and learn a little bit more about Skags and what he trades, this is his actual channel, Skag Academy. I highly recommend you guys to go ahead and subscribe, show some love, show some support. Definitely take a look at his videos. He provides a ton of value. It's probably going to be a lot more advanced information that some of you guys might be seeking, and take advantage of it. Again, super knowledgeable individual that I truly believe in, that I truly trust. And trust me, I made a lot of money based off the information that he has also gave me. All right, so take advantage of it, Skag Academy. Appreciate you, my brother, for tuning in. What we're actually doing, guys, and again, I actually enjoyed this conversation a lot with y'all. And we're going to be launching, guys, right, as a conglomerate, a new YouTube channel very, very soon. We'll release all the details in the coming weeks, but we're going to be launching a new YouTube channel where it's going to be me, Skags, my boy Kyle, my boy Ray, right, a few more hitters that I truly believe in, trust in, that we've been trading together for the past 3, 4, 5 minimum years. And I feel like we're really going to be able to create a lot of value for you guys. And it's going to be more so like this, like these round table talks where we're able to really just come on and bounce ideas off each other. And I know for a fact it's going to give you guys a lot of insight and a lot of value as well, especially when you're able to get, 4 profitable, successful traders under one umbrella. you know, pretty much really just discussing what could happen next. I personally feel like it's going to be a lot of value. All right, so his actual Instagram is byscag, BYSCAG. Right, definitely go ahead and show him love, show him some support. Again, on all his streams, his social media, I promise you he will definitely give you guys a lot of value for sure. And once we do go ahead and actually drop this conglomerate YouTube channel, we will obviously be promoting that. And again, that's going to be more of a conglomerate channel where we're all together, all providing value, and we're all just coming up with ideas that ultimately can help you guys out at the end of the day. Right, we do this for you guys because we really want you guys to win. We want you guys to succeed, and we're going to be leading with real value, not no fluff, not no BS that a lot of other people like to do here on YouTube. So family, I appreciate you guys. I love you guys. Thank you guys for rocking with us tonight. I look forward to coming back with you guys on Tuesday. Also, matter of fact, on Sunday, I am going to be doing my live stream again, my weekly outlook with y'all like I do every single Sunday. It is going to be a live stream once again, probably at the same time we started today, 12 p.m. Eastern. We're going to do our Sunday weekly outlook. So I look forward to seeing you guys on that call. And then after that, we'll also do our Tuesday, Wednesday, Thursday Asian session like we've been doing pretty strong lately. So I appreciate y'all. I love you guys. Thank you guys for rocking with us, family. And I hope you guys all have a phenomenal rest of your guys' day. Let's get it. Let's go.